Good morning, everyone. It's Monday. Time to take a look at the markets and see what this week might bring. Just pulling up my screen share. And let's quickly scan the news site. Not much to report. Europe pretty red. Reaction Monday, as mentioned last week. US pre-market slightly in the green, but that could turn around pretty fast. It's quite normal after such a dump on Friday that you get a small rebounds in the mornings. Let's see what happens at US market open. For the rest, a lot of news about the Eastern Europe situation, obviously. Supply issues are exploding pretty much. With that also inflation. I promised some of you to do one of my rants about the macroeconomics, so I will do that at the end of this MMA. And these things will come back there. For the rest, I think it will be a wild week on the markets. That's pretty much certain. Because if we look at the calendar, and they changed the layout, so my markings are not working anymore for some reason. Today, the manufacturing PMI, that's a nice indicator of how the production industry is doing in the US. Don't think it will be a big market mover. Tuesday also relatively quiet, but on Wednesday then the fun starts. We've got the balance of trade, and I think that could turn out to be worse than expected. They're already expecting a huge drop to minus 107 billion. One to watch out for sure. We got the non-manufacturing PMI, so more the service companies, how they are doing. Expecting a bit better, but don't think this will be the big market mover. But we have the Fed interest rate decision, where it's expected to go to 1%, and the following press conference after that. So if they're hawkish again, it could definitely be the market mover. So Wednesday is the day to watch out for at US market open, and later on in the European evening times with the Fed doing its thing. Then Friday we got some payrolls and unemployment rate stuff, but don't think that will be any change there. So Wednesday is really the day to be careful on your positions, especially around US market open. Don't underestimate those impacts it could have on the market. Let's dive into the charts. The DXY that everybody is watching, obviously. You see these levels here. If I zoom out, they are based on... Oh, not that far. Okay, that's a bit too zoomed out. But these levels are based on the pretty much the beginning of the March peak of 2020 and on the highs of December 16 and January 17 when we had this previous all-time high. So I'll try to zoom in again. Slowly getting there. We see that DXY just broke that previous all-time high from the end of 2016, got its bit of a rejection there, bounced off the previous highs from March 20, and it's now just going sideways. Interesting to see what will happen once we break one of these levels there. And it's pretty much nobody really has a fundamental correct opinion on it. We just have to see how things develop there. Quickly looking at the Bitcoin stock market correlation, and we are looking at the correlation with the Nasdaq here. We see that the bottom is the correlation. We're still at 92%. That's excluding the weekend action, obviously. So slightly dropping. We were at 98% earlier in April. But as you can see, we have been correlating with the Nasdaq pretty much since the end of March. So hopefully we will get another period like this where Bitcoin is going up while the Nasdaq is going down, but so far correlation is still extremely high. Gold still in its pullback. It's getting close to a support level around that 1880-ish to 1865-ish. We could even pull back easily to the 200 moving average around 1814, and that would be a nice entry when it crosses back up. So far we are though getting a nice 8-9 in the potential reverse zone with a bit of a warning there, but there's no momentum flip to the upside yet. That might come in the coming days when the macroeconomics develop during the week. So looking for a nice entry there to take a long position on gold. Just waiting for those confirmations. Long term, even though it's pulling back a bit, we see if we just take the FIB levels here, that we are pretty much still, oh no, don't buy. We're pretty much floating around that Fibonacci golden pocket here. We might pull back a bit further, so look for those entries, looking for this trigger. This probably won't make an anchor wave, but waiting for that market hyper confirmations, waiting for the trend profit reversal signs before taking a position there. Bitcoin on the daily, while the stock markets are dropping like crazy, and we'll switch to those charts in a bit. On the daily time frame, Bitcoin has not made a lower low yet, so we're still pretty much in a channel there, and this chart is getting a bit messy overall, but we're still on this very high time frame channel. But you can also argue that we are in a lower time frame channel also. It's pretty much here where we bounced almost at the bottom there, and we do have some support from some bullish Gartley on this daily time frame, harmonic, and there is some space for the higher time frame channel here, but this does definitely look, it is bouncing, but the question is, can we break this trend line? We will check that price structure, and it's a wedge on the another chart in a bit. So far on the daily time frame, there's no reason for concern yet until we break below 35k pretty much. Bitcoin dominance broke its moving average. It's now building some structure. It does look like the Bitcoin dominance will continue up for a bit. So not even considering looking at alts at the moment. Alts are bleeding out. The whole market is, the macroeconomics are in a very risky period. Bitcoin is already considered risky from a lot of people, and altcoins are always much more risky. So nobody is buying those high risk investments in alts when the market is so uncertain and looking bearish. So hopefully later in a few months or weeks we get a nice alt season when things bounce back up, and I think the alt gains will be will be insane then. I'm really looking forward to that, but for now it's not the time to trade alts. Clear picture here that illustrates it. You see Ethereum to Bitcoin, it's just slowly bleeding out, and there's still a lot of downside potential there, and it's also in a bit of a potential channel here, but not looking at that Well, positions on Bitfinex still simultaneously the short and longs going up, so they're still looking hedging. There is a bit more shorts being added than longs, so that correlates with the sentiment in the market, but by the looks of it, most of them are just hedging. They're having simultaneously longs and shorts, low leverage probably. Total market cap, we had this support line here at 1.64 trillion that held. We are having bullish harmonics there. Volume is still declining though, so there was not much volume in this dip and recovery, and it's back inside the battle zone between 1.7 and 1.8 trillion. So this looked like a bit of a fake out to me. Low volume, one down, instantly back up. But we have to wait until we confirm to break the 1.8 trillion with a nice confirmation before we can have a forecast for 2 trillion and higher again. But still, also here, we did not make a lower high on the daily time frames, and we are back into the zone. Pretty much the same structure as Bitcoin on the daily time frame. Oh, the stock markets, and this is the Nasdaq. We on the monthly time frame, where you can see a big red bearish engulfing candle on the monthly time frame, and that's really nasty. If you look at the Fibonacci's from the March 20 low to the November 21 high, then we currently are at, there's a very small candle here of the month open pre-market. We are at the 0.382 retrace, and it makes sense looking at the whole macro that we will at least go to the Fibonacci golden pocket, and that would mean a 20% drop from current levels. 786 is just past 30%, and the 886, the common deep retrace for a lot of bullish harmonics, is 40% away. And we have, if you're interested in following the whole macroeconomics, you heard the term the big short, and these levels suggest that might become a reality in the coming month, but more that in my macro rant at the end of this stream. Europe looking slightly less bad than the US stock markets, like on a monthly scale still, like the S&P, and we see pre-market is slowly dipping into red now. S&P bearish engulfing, Dow Jones bearish engulfing slightly in the green, Nasdaq bearish engulfing. Let's take a look at the daily. On the daily, we see that double top formation that I spoke about, I think 2 weeks ago now, in the market analysis, where we have these double tops. So I think it was slightly almost exactly the same levels, but we see that the momentum difference was much higher. So it took, if you look at this compared to the straight horizontal line here, it took a lot more momentum, a lot more effort from the market to get the prices to the same level, and then it failed. So currently we are looking potentially at some bullish divergence here on the momentum oscillator. So a bit of a relief rally, probably bouncing a bit up the coming 2-3 days, and if we will continue down, my best guess is that that will be on the Wednesday, with the whole event, the big events on the calendar. So I do expect something like this, maybe even go to these levels, that we have a bigger bit of recovery level before continuing back down. So just looking at the daily trend profit, we did have that completed selling cycle when we just went sideways with a bit volatile up and down, but as we can see at the price action confirmations, Williams, percentage R and SSL channel were just staying in the red. So the reverse zones were playing out sideways in this case, because in very bearish conditions, bullish reversals are very hard to do. Like here, in this example here, where we had these reversals signaled based on the Tom DeMark sequential count combined with my trend momentum oscillator, we see that the price action was confirming, and we had a nice rally here. Potential reverse price action confirming. We had a bit of a rally there, but pretty weak. But here, same price action confirmation was clear, and we had a very nice bounce back. So in this case here, we did have the reversal signs, even divergence on the momentum, but it just went sideways, and we could tell that by the price action confirmation that it was not an entry there. So lovely teamwork of this different oscillators in the trend profit there. Quickly switching back to the weekly scale there, just going to clean that up a bit. We see sell cycle ended, momentum was already upwards, but price action didn't really go to the good levels that we wanted to see. Quickly taking a look at the 4 hour. We did make a slightly, I think it's pretty much the same, 12,801.50, 12,806, so slightly higher low here on the Nasdaq on the 4 hour chart, but also a lower high. So let's see how that develops. I think maybe a bit of a relief rally until Wednesday, and then it's pretty much the market will pick the direction up or down. European stocks are getting a nice, pretty much also slightly, what was this low? 436.75, 437, so slightly higher low. It's looking to catch that bit of a relief rally. And you see the power of the harmonics every time here. Bearish harmonic, buff. Down we went. Here the trend profit, potential reverse. Price action confirmation here, but so far the price action has been pretty weak on that 4 hour. So enough stock markets for now until we go to the rent. We had these already. Quickly looking at some other high time frame analysis on Bitcoin. We're still below the high time frame strength here. This ribbon, we are still making so far higher lows, and until we break below that, yeah, pretty much 35k, that's the level we want to hold. We might wick to 33, 34k ish, like here on the daily time scale, but you don't want to see a candle close below 35k. So far, still pretty much we've been going sideways since, feels like forever, since the beginning of January. So almost 1.5 years sideways. But you can see that the volatility is decreasing rapidly at the moment. So that does suggest that the coming month, probably around or just after the summer, it is expected to get more volatile, and hopefully in the direction we all desire, to the upside. Logarithmic regression was still in the lower part of the buying zone. So if you look at this, we are, I think, 1.5 to almost 2 standard deviations down from its middle band. So there is some downside potential still, obviously. Here also, the bottom of that buying zone is 33, 34-ish, and the absolute bottom, at least looking at logarithmic regression trends, the absolute bottom is currently around 25, 26k. We only broke it once during the March, the COVID crash in March, but that was a black swan event, so we can pretty much cancel that one out. Just looking at here with my high time frame Fibonacci play, we're still at above my predicted bottom here, and based on this, the bottom is 35k. That's why it's also such an important level to watch. Last one here, floating around the lower levels. It is holding. It's currently at 38k. Oscillators here, holding on to the moving average, but we are still a bit shaky on the upside. So high time frame still looking good for Bitcoin and looking terrible for the stock markets. So hopefully this is the decoupling we are waiting for. Quickly looking at the daily time frame, we now have a confirmed falling wedge, because we have that 1, 2, 3 touch points at the bottom, for 1, 2, 3 touch points at the top, and the last bottom held at this support zone. Wedges have the tendency to break back to its upside, so there's a pretty good chance that we will see price levels of about 42k if this pattern follows these statistics. Levels to watch, that 37k we don't want to break, otherwise we go to 35k that we really need to hold. But we could get a bit of a rally in the coming days. But I am waiting for a confirmed breakout of this wedge for bigger trades. If we break and confirm it, there is about, let's say we break it on Wednesday, if the macro gets some good news, then there is 7 to 8% measured move of that wedge. Just looking at the chat, we'll take a look at that in my rant. So switching to the 4 hours, we see some volatile up and down action over the weekend. Yesterday was pretty much straight up, straight down, straight up. There is some resistance at 39k, so hopefully we break 39, then go to the top of the wedge and break 39.5. Confirm the price action with a nice backtest, hopefully break, backtest, bounce, and then you have a very good entry once you exceed the first initial impulse up with decent volume there. So smaller time frames, let's switch to the 1 hour. We do have some momentum decline, but price action is still good. We do have some exclamation marks, so might get a bit of a pullback here locally. Volume is still pathetically low. Look at this decrease in volume in the last days. It's definitely coiling up for a bigger move there. Trend profit, we see through money flow, it's been going positive, so quite nicely. Just looking at these wave structures here. That looks pretty good though. This TD count seems to be going sideways, not really reversing here. The 1 hour looks good. Quickly checking the 4 hour. Nice divergence on market hyper playing out pretty much at the same time when we got the price confirmation here, and we're just slowly crawling up, but on really low volume, so it doesn't look like a very consistent bounce there. 24-minute trading time frame. We did have nice reactions on these reversals here, also here, mainly sideways action, and we are looking at some recovery. Nice bottom exclamation marks here. Those have been such a blessing on these time frames. Just look at the exclamation marks here. Perfect bottom. Was the bottom, seems to be the bottom, and price action is looking to go to the green here. So all in all, you could definitely argue that there's some kind of a wedge structure being made here also, but then a more bearish wedge. You could even argue that the wedge already broke and it's now confirming, trying to backtest and confirm it. So I have to see, obviously patterns on the 24-minute are much less reliable than on higher time frames. But if this wedge breaks, it will probably go close to here and we might get If we get the move downwards, we'd probably bounce somewhere here where we make a triple bottom with 3 higher lows, and that could be a very nice reversal sign there. So just watching the indicators, see what happens around the 39k resistance. If we break, or are we getting rejected around these levels here? So nice to look for a trade today. So that's my normal Monday market analysis repertoire. Just looking at the question in the chat, what strategy should be taken from the Wednesday regarding US indexes in connection with the economic calendar? Well, hopefully the charts always have a problem loading when I'm streaming, so hopefully it loads. In general, we had a pretty bad monthly candle and everybody is talking about it, so the sentiment could be more downside, and the market usually corrects a bit to the other side then. So we do have those bullish harmonics in play, so I'm thinking we will get a small bounce up. So for the S&P 500, that's probably going to be around 4,300. For the Dow Jones, probably 34k, nice round figures. Nasdaq 13,500-ish. I'm not going to include the stocks. So I expect some small upside price action until Wednesday, and Wednesday, if they are around these levels, then depending on the numbers that come out, it will probably react nicely to the upside, where it could definitely go 4 or 5% or even higher, but it could also be the pivotal moment where we break further down. It all depends on those numbers. And of course we could get a bad market open, but by the looks of it we are pretty much neutral by now. But hopefully more closer to the US stock market open we will get some more direction for today, Tuesday, and probably beginning of Wednesday. So always with those calendar events, it's not if the numbers are bad, but it's if they're much worse or much better than expected, than the consensus, that's the move. And you never know what the Fed pulls out of their high hats and from under their black ties on the Wednesday with the rate hike decision. And it's pretty much certain that the rate hike will go to 1%, but it's the story around it that is the market mover. So quickly looking to some economic rents, and if you look at the things being into play, you know, in 2008, it's my opinion that they pretty much kicked the can down the road by starting with some money printing to prevent a major recession, depression, and maybe they should have let it happen then, because it was, if you look at the cycles of the markets, it was bound to happen there. But we kicked the can down the road, and now we had the March 20 system shock, and we now have the Eastern Europe situation, system shock. We now have the results of all the money printing based on the causing inflation, and obviously they have a perfect scapegoat now to blame Mr. Russian. But the inflation, yeah, just look it's now, the official figures are 8.5 at the moment, but keep in mind they changed the way they measure the CPI in the 80s and the 90s. So if you look at if you would take the same calculation that they used in the 90s, we would be at probably around 12% inflation. While if you go to the 1980s based calculation of CPI, we are at pretty much 17%. So yes, they do argue that it's not as bad as the beginning of the 80s, but actually it's even worse if you use the same calculation. So it's not, it is for a reason that most economics call it the CPI instead of the CPI. Going back to the rent, I think we've been kicking down the big short, the recession down the road since the 2008-ish crisis, and we managed to do that by further globalization, moving more and more manufacturing, getting it from China, globalization, but also technological innovations that allowed us to be even more productive. But in the end, reality hits, and now we have the supply shocks, and even recently with the lockdowns in China, in Shanghai and Shenzhen and everything, that's creating a new supply shock that will be visible probably in the coming weeks. If you look at some economic charts, you see United States debt to GDP, and this is only from December until December 21, and especially with the recent events, you can pretty much guess the current levels there. So generally speaking, when your debt to GDP goes over 100%, that's the beginning of the end, and that happened in 1918 already, pretty much. If you're interested in those backgrounds, definitely take a look at Ray Dalio's book, The Changing World Order. It's very interesting. There's also a very good 45-minute summary on YouTube. Very insightful, and the amount of research being put in that, it's amazing, and it just puts together all the pieces of that puzzle. Consumer sentiment and last figures was from March. So we've seen since we are even much lower level since the March 2020, and only August 11 it was this bottom, but it's my expectation that we currently are below that. We might even go close to 50 once these figures get updated for April. So that's another amazing thing. We see that in the US the Fed balance sheet is stabilizing finally, but that one, if you look at the same chart, play along, we see that in Europe that is not the case yet. So European Central Bank is still acquiring more assets, and in the US there's a clear stabilization in the Fed balance, in the United States Fed balance sheet, and I think that is the main cause for the DXY to be in such a high state. Personally, it means that in the US the whole money printing has come to an end, and the crazy buying of asset with the magic printed money has come to an end, and Europe has not. So I think one of the main drivers of the DXY pumping European stock markets. We also see the 10-year US government bonds pretty much making a lower high here. And I don't know if TradingView has enough information. If you go to the monthly, we now have a count 8 on the current month, and 1, 2, 3, 4, and it's pretty much a certainty that we will reach a 9 in June. So June, July, August for the summer holiday, and it does look like on the highest time frame we will not break this previous high from November. So bonds, government bonds, I don't think there's that much upside potential anymore. And on the monthly time frame you see the the TD sequential counts adding up to it. And interestingly, I think it's funny, I've been using the TD mark indicators a lot. And if you follow Raoul Paul on YouTube or one of the other medias, you heard him talking that he's looking at these time frames mainly using the TD mark indicator with the counts also. So it's nice to see such a legend using the same tools as we do, but just on crazy high time frames. So bonds are, I think, topping out a bit. The CPI, obviously, it's just a pity we cannot chart these shadow stats, but I think the real inflation is pretty much on these levels of the 40s, really, surpassing the 80s by far if you would have used the same calculation. So just to illustrate that, they changed in the 80s, in this period, they changed the calculation of the CPI, and they did that again in this period here in the 90s. So if you keep that in mind, that they changed how they calculate it for just to make it look good, it's just window dressing really. And you know that that this decline was artificial. It probably went here and it just floated. I think this is more realistic inflation. And otherwise, even with their 80s correction calculation, it would have gone this way. So they only managed to have it sloping down by changing the calculation twice within 2 decades. So the big CPI, just go to the shops and you'll look at your prices and the increase on that, and you get a feeling that confirms these levels. So far, my bit of ranting on the economics, just food for thought, see how things play out. And these shadow stats are pretty much very interesting, and they are definitely not tinfoil hat theories. They're based on really fundamental data. You got the money supply charts, you got the GDP also, where you have the official numbers, but you also have the alternate, probably more realistic numbers. Shadowstats.com, very interesting to take a look at if you have a spare moment. Alright guys, that's it for this morning. Later today I have another live stream with the launch of Trend Rocket, an indicator to automate trades using bots. pretty much been a journey of a couple of years for me to get to this level, and I'm really excited about that one. I'm running it in the beta, and so far I'm on a 12 win streak, so I'm really happy with how that looks. So please don't skip the live stream this afternoon. It will be very, very interesting, I promise you. Alright, that's it. Safe trading, speak to you later, and stay safe out there.